Welcome everyone to The View. Today we are going to be focusing on the budget, which was delivered on Tuesday night by Jim Chalmers. We're recording this on Thursday morning. John, clearly this was a very political budget. I think we know, and in fact we've been told today that the Prime Minister will probably be calling the election for, there are only three choices left, either the 3rd of May, the 10th of May, or the 17th of May. That's when it has to be on one of those three dates. I thought that this was a budget which was all about trying to tell people that they hear their cries about the increased household expenditures and inflation of the last couple of years, and they're responding. So it's very much a political budget. How did you see it, and what were your initial thoughts before we drill into some of the detail?
Well, as we know, that was a budget they didn't intend to deliver. All things being equal, we would have been having an April election, no need to have a budget. And whoever won could have a budget in May based on a lot better information than what has been gathered or presented in this document. And I make the very important point is I think this document is rushed. The forecast can't be believed. The FY26 budget is probably a work of art. I think they probably said this is the result we want to get. So you backfill Treasury to try and get us the result we want, because no one's going to really look at it critically. We're all going to be swamped by the election cycle and election debate. Having said that, there's also this little political offer of a tax cut, very minor, quite insignificant, but it's a feel-good tax cut which wedges the opposition in a debate regarding approval or non-approval, support or non-support of that tax cut. So that's gone through Parliament last night. Doesn't mean it can't be unwound by another government, but it's gone through. It's clearly not enough, and it's going to lead to reactions, I guess, from the opposition. We'll see tonight. We're videoing this on Thursday, but the press is full of statements or leaks that there's going to be a cut in the Petrol excise duty. I've been talking about this for years, so it's almost like come in spinner time for me. You know, Australia's got to get the cost of living down and stop people chasing wage rises, which then feed back into inflation in a loop. It's pretty basic economics. Mainstream economists just don't understand it because they all did their university degrees in the 1990s and the 2000s. They never understood the 1970s, which was a cost-price cycle. So both sides of government are trying to do the right thing, but I think the opposition's going to come in hard with their cost of living and cost of doing business policies.
Yeah, so just to mention a few of the cost of living support mechanisms, the one was reducing the personal income tax rate at the lowest tier from 16 to 15 next year and then to 14 the year after. That equates to roughly $5 a week in the year commencing July 2026. It's literally 73 cents a day. It's pretty meaningless, although you could argue it's a good thing. The next one is the energy rebate of $150 for the next 6 months, which continues the rebate that they introduced previously of $250. And then there have been some reductions in health costs with the maximum you can pay for an approved medication going down from 31 to 25. How are these things going to be paid for? Can we afford it? Are they meaningful, or is it just, again, political messaging?
Look, I take the point that we will be going into deficit. I'm finding it quite surprising that the deficit for this year is stuck where it was. At the half year or the mid-year update, revenue or tax collections was running on an annualised basis $10 to 15 billion better than forecast, which meant the budget deficit would have been half. Now that's been lost somewhere. The update from finance in both January, well, the last one I saw in January, showed some deterioration in collections in December and January, so maybe there is some basis for not adjusting the budget. But having said that, we now have a big economy, we have a big budget. So when we talk about funding and growing debt, the budget for FY26 is going to be a $750 billion budget, give or take, $750 billion. Now, when you start playing with economic numbers, and I'll go through this in detail in my letter to investors regarding the budget, the Australian economy now is growing most years by $100 billion per annum, which means that the revenue coming to the government, if you use the rule of thumb of 25% of GDP, $25 billion increased revenue comes in to the government to spend. So in terms of funding a lot of these thought ideas and cost of living issues, they are fundable from the growth of the economy, supported or not otherwise by inflation and wage claims, supported or not otherwise by the currency, supported or not otherwise by commodity prices. And we've talked about this before, Paul, the very conservative forecast on iron ore prices, and they're still out by $40. So
it's still at $60 a tonne, whereas
yeah.
the current price is $100 a tonne.
Yeah, so they get it wrong every year. So there is fat in the budget. I just regard the budget document as ineffectual. I think the policy settings are poor, and we're going into a almost like a vacuum debate going into the election, and we'll find out the true story after the election when there's a come clean exercise by Treasury. I'm not worried about how it's funded. I'll make this point right up front. There's a statement in the Treasury documents supporting the budget of a review by the IMF of Australia, and it clearly states Australia's debt position and our fiscal position is far superior to our developed nation peers. We are nowhere near the issues, and we have, according to Treasury, better growth prospects than even the USA in the next 3 or 4 years. So I don't know what we're so negative about. It probably reflects bad leadership than anything.
Yeah, well, I think you've put your finger on it, but we seem to have had a lot of luck. So we've had commodity prices which are very, very strong over the last couple of years. We've had a high immigration intake, but there's no reform in the budget. There's no vision. Apart from the energy rebate, there's no acknowledgement of what has become a major structural issue with energy policy in this country, as we've spoken about in the past. There's no addressing of the huge costs of the NDIS, which is about to overtake defence expenditure at $52 billion a year. So there's a lot missing from a budget. As you say, it really does look like a rush job.
Well, if you're frustrated, I think in the next few weeks the whole Australian population will be frustrated by the absolute lack of a vision statement coming from either side of Parliament and a wedging exercise by those in the middle. It's quite amazing when you think about having a vision. It needs to be a shared vision created by the Parliament, so everyone contributes and you don't get too much debate once you've agreed on where you want to go. And yet, in the last week, two sides of Parliament, the major parties have agreed on the Tasmanian salmon industry. I'm not saying they're right or wrong, but they seem to quickly agree on something like that with no great debate. It's great that we support export industries and we support food industries. It's amazing how they can agree on something like that, but they can't agree on an energy policy, an education policy, a healthcare policy, a pharmaceutical policy. How does Australia engage with Asia policy? Where are we going to be in 10 years policy? So it's so piecemeal. it's becoming embarrassing. And one thing we're learning from America, whether you like Trump or not, he is forging and forcing through policies, which may be his vision, but Australia desperately needs a vision statement and to be working towards it, where we can actually work out whether we're achieving, logical goals and not just agreeing to things as they appear, which suit both political parties. It is quite. I think there's going to be a backlash. The more this goes on, I think the middle part of the electoral offer is going to get more votes, and we're going to have trouble in terms of forming a government.
And I suppose the risk is that if Labor does get back in with a reduced constituency and forms a coalition with the Greens, that might tend to push policy direction even further to the left, which makes it
Paul, if that happens, you can virtually jump the budget. It's of dubious quality as it sits in terms of its forecast, but if we get a hung parliament and a coalition drifting into the left, you can jump the budget, and God knows what you're going to end up with. I think you'd have trouble with growth, and I think on the growth side of the budget, the revenue side, they'll try and attack it with some strange taxes. Then you'll certainly have a problem on the growth of the economy side, which will be a work against the tax collection of the country, and therefore the ability to transmission that into growth expenditure by the government. So I hate saying it, but I think this election is probably one of the most crucial I've seen for a long, long time. And it's not because of anything other than we just don't we're in a policy vacuum. And we have a significant protest vote developing from younger people. The other thing that wasn't addressed, Paul, was the housing policy. There's nothing regarding affordability of housing.
Well, they made some very, very slight increase in who was available to access, housing assistance. But we've all forgotten about the 1.2 million houses that were supposed to be delivered. And that's so important.
Yeah. Look, it's a budget I think you'd almost say it's a budget the government had to have but didn't want to deliver. And they've turned it into a slightly, a political document, which is fine. They are politicians. But I really am getting very sceptical of the behaviour of Treasury. Are they independent? Are they really giving proper economic forecast advice on which budgets can be framed? If I was the opposition, I'd be pretty annoyed about getting a document with forecasts which was delivered on Tuesday. And the lack of skepticism and deep analysis by the press regarding some of the forecasts regarding the outlook for Australia's growth. Now, I'm optimistic, but my optimism is based on strategy and policy. How can you forecast Australia in the next 4 or 5 years without a policy or strategy? It's a wish list. It's just econometrics, probably written by the equivalent of first-year uni students. That's how bad it is. And when people read my document, I'll show it. Australia's gone from a strong economy leading into COVID, and we've come out the other side in a bloated mess. I liken the Australian economy now to an economy like a balloon full of hot air and very little substance. And Australia's growth in the last 2 or 3 years in particular, you can leave the budget aside, it's been driven by growth in the budget expenditure coming off the back of excessive inflation. Okay, so it's inflation growth, not real growth, stimulated further by a massive inflow of immigrants. We know 1 million people in the last 1.5 years. And if you delve into the budget papers, there's talk about the immigration rate being slowed, but the budget papers, and I can pinpoint it, actually say the expectation is 850,000 people to enter Australia in the next 3 years.
Yeah.
So the bureaucracy is working economic numbers on something which they haven't been directed to by the government or parliament. It's chaos.
John, they say that expenditure on social services is forever, but revenue is intermittent. And some of those assumptions that we're looking forward to, growth of 2.25%, and inflation of 2.5% in the forward years. Well, if we, I mentioned the NDIS because it's one of the biggest programs we have, originally formulated to assist people with severe lifelong disabilities, and I'm all for that. But I saw that now 1 out of 12 boys between the age of 5 and 7 are registered for the NDIS support system as having autism. I mean, it's blown out of all proportions, and some of the revenue the government is claiming is based on the NDIS expenditure being reduced from 10% per annum increases down to 8%, although it did grow 10% last year. So the
Look,
credit.
there's no doubt, Paul, when governments open checkbooks and engage with intermediaries, commission agents and management companies to administer aged care, childcare and parts of the NDIS, and now we can see it across the electricity grid as another adjunct, you are heading for trouble in terms of managing the budget and the costs to Australian taxpayers. We've got to be careful about what we outsource, and we've got to be careful about how we manage government services. And there's too much of this outsourcing going on, which allows the government of the day to just claim, well, it's the private sector which is letting us down. They don't administer it, Paul. I mean, one of the clearest things, which is an embarrassment in the budget, and I encourage people to look at it, is I don't support tobacco, I don't support smoking, but when you have to watch TV, shows and in-depth reporting on the joke that the tobacco market, the cigarette market of Australia is, the avoidance of taxes, duties, by under-the-counter sale of massive amounts of tobacco and cigarettes, which is somehow getting through our borders, coming in here, while there's, organised crime closing down tobacco shops, and it's almost like the government and the police don't even know what's going on. And now we've seen $1, $2, $3 billion black hole appear in the collection of excises.
Yeah.
So, it begs belief who's actually running the country, and the bureaucracy's got a lot to answer for. And some of the excess expenditure, as you say, in some parts of the social security system, and the non-collection of essential taxes, which could be redirected into healthcare.
John, we're probably running out of time, but I would have thought that one of the responsibilities of the government in the budget process is to ensure against the risks ahead. Some we know about, some we don't. We know that we're going into a global tariff war, essentially, with China being a big target of the Trump administration. And lo and behold, obviously, China is by far our biggest trading partner. What preparations, what cushions have we got to protect our economy in case this tariff war really worsens at our expense?
Well, it's a big question, Paul, and we haven't got a lot of time, but I would be thinking big. I would be looking at what Australia's competitive advantage is. And one of our competitive advantages is very untapped in terms of protecting Australia, and that's the superannuation system. We have an enormous amount of savings and capital, which is beginning to drift dramatically into offshore markets, into markets or economies, friends and foes. That capital can be better utilised, better directed. One of the charts which people should always look at in the budget is the amount of of our bonds, which is foreign owned. And again, we're drifting towards more than 50% of our issued government debt being owned by foreigners. And they love it. We've got a AAA rated bond paying one of the highest yields of the democratic and civilised developed world. We pay higher yields than, some basket cases in Europe. We pay way above Japan. There's a strong argument to address what you suggest as a risk is to, restrict the amount of credit that Australian governments borrow from offshore. If there is a crisis, the one thing you can guarantee is foreign creditors will run for cover. They are not here to support you. They'll take their capital back home. And it's about time we utilised our immense superannuation capital to support our bond markets, to fund our own growth, and to take that capital risk away from whatever happens in the future. I'm not restricting foreign investment. I just don't want it on the debt side. If they want to invest equity risk into this country, great. And you can see this as a logical step for security. As Donald Trump, in his wisdom, said to the Ukraine president, give me your nuclear plants, give me your rare earths, and you can say you've got security for the American government. Interesting concept, which I think we should explore further in the future.
Well, we've got a lot to talk about. I just wonder, just in ending off, if one of the implications of your comments is that Australia will have to retain this low Australian dollar valuation.
Well, Paul, if we did restrict the amount of capital flowing out of the country, and it's reported in the AFR this morning, you and I have been talking about the devaluation of the Australian dollar for years, caused by industry funds sending capital offshore and selling the Aussie dollar. Well, Deutsche Bank analysts, credit to them, have finally woken up to that risk. If only they'd been watching The View for the last 2 years, they would have worked it out. But it's a big issue, and it needs the Parliament of this country to again design economic policy which they agree on, which is for the benefit of Australia, not for the benefit of the United States. I love the United States, but I don't want to fund their 125% of debt to GDP. I don't want to fund Trump's economic program. I want to fund Australia's economic program, hoping we will develop one.
A good point to end on. John, thanks so much. Always interesting. And for the audience, please look out for John's written analysis of the budget. It will be very much worth reading. Thank you. Cheers.
Cheers.